Well, good Friday morning, everybody. I'm Marlon Bowling with you, your tour guide to the ag commodities. We're almost to the end of the week, and this particular week seems like it has exhausted everybody in the trading ranges. Volatility, it's that time of year, that's for sure. We have Brian Hoops on the line. He joins us now. He's with Midwest Market Solutions, and he hails from Springfield, Missouri. Thank you for joining us here, Brian, this morning. The markets were under pressure overnight, and I'm just hearing a whole plethora of reasons why that may be. I want to hear it from your point of view.
There's a ton of things that are going on in the marketplace. You know, we've had a big rally this week, and now we're setting back, giving back a big part of that rally to end the week here. A lot of things need to talk about, and they're all very important. The weather is going to be very hot and dry next week, but after that, there's better chances of rain that are moving into the forecast. So there's going to be some crop stress, but it's probably limited to maybe 15-20% of the crops. A lot of places have received some rainfall, and they'll be able to withstand this heat and move through that. And then as long as that heat dissipates and there's better chances of rain, the crop should be okay in the vast majority of areas. Overnight, Russia once again bombed ports of the Ukraine, fourth consecutive night. But Ukraine has said they expect to reach an agreement to resume trade activities. And so that put pressure against the wheat market overnight after President Zelensky made that statement. So those are some major things that are driving the markets. But one thing I don't know that anybody's really talking about is what's happening with the U.S. dollar. The dollar plunged last week to 52-week lows, trading around 99.50. And that sent a host of commodities rallying. Gold and silver, the grains, the livestock markets all rallied sharply. And since that time, the dollar has rallied for 3 or 4 sessions now, and went from 99.50 up to 100.7. That's a big rally, and that is putting pressure against all those markets that I just mentioned, that they're all trading lower. So there is a direct relationship with what happens with the dollar and what happens with the grain markets, the metals markets, and crude oil and some of these other markets.
Now, this morning, I'm hearing that Argentina has come up with a new program kind of modeled after what they did with soybeans earlier, and I think it's called corn dollars. Do you know anything about that?
Well, we've heard some rumblings about it. I don't know that anything more than past what the rumors are, that they're going to pay some of their farmers in these dollars that they're coming up with. There's been some production estimates from the IGC, the International Grains Council. They upped the world production numbers for corn and lowered for wheat, citing that the safrinha crop is going to be probably 190 million bushels larger than previous estimates. So that's a big chunk of corn that's going to hit the world market and compete with the U.S. for exports. Meanwhile, that Argentina crop is shrinking as far as the wheat size go. It's shrinking a little bit, and that should be supportive for our futures, but yet we just can't seem to export any wheat.
So where does Brazil fit in among all the jigsaw puzzle pieces right now? Because I know they have a lot of soybeans and a lot of corn to sell. And I know that China had bought a whole big amount of corn and soybeans a while back. But most of it was supposed to come from Brazil. How much do they have left?
Yeah, they've been taking a lot of product out of Brazil, and the safrinha corn crop is not even half harvested yet. So there's still some crop to be harvested and then sold into the world marketplace. And I think China's going to end up taking the bulk of those purchases. That crop, as I mentioned, is getting larger as they've gone into their harvest. They're finding yields are bigger and larger than expected. So when you talk about 190 million bushels more product that's hitting the world markets, you just basically add that back to our U.S. ending stocks, because that's crop we're probably not going to export, that some other country is going to buy from Brazil, and most likely it's going to be China and not the United States.
All right, let's take a look at our current prices then. Our quotes are from Bar Chart. We'll start with the corn. And as I mentioned, everything was lower overnight. We had the December corn down 14 at 5.32 and a quarter. In soybean trade here, as we came into the morning hours, we had November closing 16 lower this morning at 13.88 and 3/4. Meanwhile, on Chicago wheat, we'll go with September. It was down 22.5 cents. Wow, 704.5. Look at that high we had last night. 733 and a quarter, and yet we barely closed above $7. On Kansas City hard red wheat, December was 24 3/4 lower at 8.56. That was a huge drop from 883 and 3/4 that it had overnight. In spring wheat, you had December down 13.5 at 898 1/4. Brian, real quickly, today also is the last trading day, right, on options for the August contract?
Yeah, correct. August options go off the board at noon today. So that could be a little bit of volatile trade. A lot of people went out to the August contract to get some longer term look at the market, get past the 4th of July and most of the July weather. So that could cause a lot of positioning by the closing bell today for grain futures.
A lot of stuff to chew on today. Okay, thank you, Brian. Sit tight. We'll come back and we'll talk about the livestock side in just a moment. We're back talking with Brian Hoops of Midwest Market Solutions. And Brian, let's take a look at this livestock trade. We had some very interesting market activity. Cattle have had a huge trading range, and we had new recent all-time historic highs. We reversed off of that. Last I knew, we didn't have too much cash cattle trade in the country at least until about Thursday morning. Have we broken that loose? Have we seen some trade now or not?
If we've seen a cattle trade, it's been very limited amounts, not anything I think that we can say this is what the market is for the week. I think that's coming yet today. So we did see some bids in the Northern Plains being raised from 295 to 298 up to 300. And that is going to be much stronger than the previous week. So we're looking at much higher dress trade in Nebraska. In the Southern Plains, we've seen the 178, 179 bids being renewed once again. And I haven't heard anything better than that or any trade better than that. So it may be just waiting until this cattle on feed report comes out this afternoon. But, Packers, what we're hearing anyway, is that they are starting to reduce some of their kills. And maybe they are bought out for a week or two now, considering what they plan to do with their kills. Their margins have escaped them. They're probably about $46 a head negative as far as their kill margins. Steer weights were up in the report that came out yesterday. So there's not a lot of real bullish fundamentals for this cattle market other than the fact that we have very limited supplies. And that's going to show up once again in our monthly report that comes out this afternoon, as well as that biannual inventory report that's expected to show the small beef replacement inventory since going back to 1971. So it's very tight supplies, and that's really the catalyst for strength in the market. But looks like demand's starting to slow. Slaughter rates are slowing down. We're about 9,000 to 10,000 below last week's kill pace with Friday and then probably a limited Saturday kill as well.
All right, let's look at how we finished up yesterday then and how the trade is set up in advance of the reports coming out later today. As you mentioned, they come out after the close today. So we settled yesterday with August live cattle down $1. You had October down 97. The October contract finished at 182.75. This is yesterday. On the feeder cattle market, we had August closing at 245.10. That was down $1.70, and September was down $1.02. It settled at 248.30 yesterday. On lean hogs, here you had the August amazing. It was up $2.70 at $100.62. And October up $3 at $84.72. And even that was off of its earlier high of the day by about 80 cents. So big action in lean hogs yesterday. We'll see if they follow through today. Brian, thanks for the help and have a great weekend out there. Brian Hoops, he's with Midwest Market Solutions. He's based in Springfield, Missouri.